All right, guys, in this video, we're going to go over a ton of examples on how to use volume profile from a variety of different setups during your day trading. If you want to use this for scalping, you can do so as well. You can also use this for swing trading. It really doesn't matter. This is a template that's going to be applicable to any type of trading that you do. I'm going to center the focus on day trading because that's what I do. And I show you guys how I do that live every day on YouTube at 8 a.m. Eastern. So come to the channel, check that out. You get to see how I do this live in real time, because it's easy to look back at a volume profile and say, well, I should have done this or I would have done this. But the way to really get good at the volume profile is, first, you have to look at how the volume profile is developing during certain trading situations, right? Because it's always different. What you're going to be looking for on the volume profile here is going to be different during a trending market than what you're looking for during a range-bound market. It's going to be different during a quiet market versus a volatile market. So you have to keep all these different things in mind when you're looking at the volume profile. So we're going to go into a lot of depth here, go over a ton of recent examples, and show you how you can use volume profile on a variety of different setups. Now, before we get started, I just want to go over what you're seeing on the chart so we can get the lay of the land here. This is Sierra charts. I love Sierra charts because, as you'll see throughout this presentation, we can replay the charts tick by tick and see how the volume profile was developing at the exact moment we wanted to take a trade. So it's a really powerful tool because not many other pieces of software give you that ability to replay the charts in real time, tick by tick. So what you're seeing here, the green is the volume profile. Okay, this is the daily volume profile right here in green. Okay, we've got the orange here. This is the point of control, the most heavily traded price of the day. The upper green line is the value area high, and the lower green line is the value area low. The value area here, this simply means that 70% of the traded volume for that day is within this area. So it's known as the area of value, where people are finding value. The asset is fairly priced. People are exchanging contracts. So a lot of volume transacts in this area. That's why it's called the value area. And when you get outside the value area, that's when the market is out of balance and is looking to either move back into value, or it's going to break away from value and start trending and find new value somewhere else. So you really need to understand those basic concepts here before we get started, because it's going to be important for your overall understanding of how to use volume profile during your different setups. So that's the volume profile. In terms of the indicators here on the chart, I use my Owings market analysis, and I learned from one of the best. I can't use his name because I don't want to get a violation for copyright or using his likeness, but suffice to say, one of the most successful traders of all time is who I learned a lot of my craft from, and I've taken it and made it my own with Owings market analysis. You can see the different dots and lines here. Don't worry too much about that right now. I'll explain a little bit about this, as we get going. But just know that these are bars, right? So these are hourly bars here. So each one of these black bars is an hour, right? So you got the high of the hour, the low of the hour, the close of the hour. Then you go on to the next hour, high, low, close. And then all of my indicators, my dots and lines, are just mathematical calculations based on different things that are going on. It's kind of like a language that you learn to read over time. And if you follow me in the live room on YouTube at 8 a.m. Eastern, you'll get a lot of insight into how I use my own analysis, patterns, setups, and tie that into the volume profile. So this is the daily chart to the left. We'll talk a little bit about this, but we're going to focus on the hourly, because you can take what I'm teaching you here on the hourly chart and then you can dial it down to a 15-minute chart, or even a 5-minute or a 1-minute if you want to scalp. Or you can take it up to a daily, weekly chart if you want to swing trade. It really doesn't matter, but we're going to focus on the hourly chart here because it provides really good examples. So what I want to say first and foremost is that heading into each day, no matter what your day trading strategy is like, you should always try and trade in the direction of the higher time period. So in this case, if I'm using the hourly chart, I want to try my best to, number one, get a good idea of what direction I think the daily is going for that day. You know, is it going up? Is it going down? Do I not really have any idea? In which case I don't want to trade that, you know, instrument at all, right? So try and trade in the direction of the daily and the weekly energy if you can. Now, crude oil is what we're looking at here. And I'm going to give you a good example of this because last week I was very bullish on crude oil. You can see that in my pre-market forecast that I post every day before the market opens, where I use Owings market analysis and go through the monthly, the weekly, the daily chart. And I talk about my bias for the direction of each major market. We go over stocks, bonds, metals, gold, silver, crude, all of them. These are the futures markets here to the right. All the major futures markets. And you can apply this to, if you trade stocks, you trade ETFs, or whatever you trade, you can use this methodology. So that's really important to understand. I apply it to futures trading. And what I do coming into each day before I start to use the volume profile and my setups, which we'll get into in just a moment, but this is important foundational stuff that we're getting into, is I try and ask myself, what direction is, say, crude oil likely to head today? Well, on Friday, which is when this example is from, non-farm payroll Friday that we just had, the daily here, this was the close of Thursday right here on the daily chart, right? And I'm not going to get into the monthly and the weekly and all that kind of stuff. You can go see that in the daily forecast if you want all those details. But I was coming into this day here before this happened with a bullish outlook on crude oil, right? So what I'm looking for when I'm coming in with a bullish outlook is, if my outlook is correct, which of course it isn't always correct, maybe it's right 60% of the time, 70% of the time, and that's pretty good with trading, right? So if I'm coming into the day with a bullish outlook on crude, number one, I'll be looking for opportunities to buy support. That's first and foremost. I want to try and trade from the side that I think the big money's on. In this case, the long side, the buy side, I'm looking to buy support, right? So if I'm in congestion, I'll be looking to buy support down around the lows, when the market is chopping around, or if the market starts trending, which is even better because then I have some confirmation that indeed my forecast for the day is correct. Then I'll just wait for a pullback like this and then try and get long, retarget these highs. Sometimes you can hold depending on what's happening, but these are great setups. So this is one of my favorite setups, is how to use the volume profile when the market is trending, which we're going to see here on crude oil from Friday. So let's go ahead now, expand our hourly chart like this so you can really see what the volume profile is doing. I want to get this just right for you guys here so you can see all this, okay? So now what's important again is you've got to have the replay ability in your charts to really learn how this works, which is why I'm going to show you how it works with replay. Here's Sierra charts. And I've got the replay set up now to this specific moment in time. So this is right at the close of the 10 o'clock hourly bar. You can see right there, right? So we're through non-farm payrolls and the market is moving. It's trending to the upside. And now this pulls back, and using my Owings market analysis, I've got a beautiful pocket support here. The middle of the moving average envelope, these green dots are heading up nicely. Everything looks good according to my own methodology. This is one of my favorite trend pullback patterns. You'll notice if I connect this low through this low, extend it out to that yellow dot, that's called a low connector support trend line. So you've got a lot of stuff right in this area telling us that 73.40 might be good support, and we may want to buy it, for a retest of these highs, right? And I say might be because you never know with trading. There are no certainties. There are only probabilities. If we're right, 60% of the time with our trade forecasts, then we can make some good money as long as we let our winners run a little bit and cut our losses quickly, which is what I do with my own trading. And I encourage you to do as well if you want to be in this game for a long time, is try to keep your losses small and, try to let your winners at least go to their target. That doesn't mean that you don't manage the trade while it's open. And if you see something that, shouldn't be happening, of course, just get out of your trade. I have a good example of that with my silver trade where I made $1,000 on Friday trading non-farm payrolls. I shorted silver. I could clearly see that even though I was in some profit, I didn't like what I was seeing. There was a lot of accumulation, a lot of support against my short at the weekly and daily volume point of controls. And so I got out of my short. with about $1,000 profit. That's a little bit of a tangent, but in that case, I didn't let silver go to my target because I could see, well, I don't want to be in this short anymore. I'm taking my profit and I'm moving on to the next trade. So that's just something important to think about. And using the volume profile will really help you get a sense of when you should let your trade run or when you should cut it. And that's one of the biggest things. A lot of people lack the confidence. You know, it's really easy to second guess yourself. And once you're in a trade, should you stick with it? If it starts going against you a little bit, should you cut it? I mean, these are not easy questions to answer, and the volume profile can help us to answer those questions, right? So here we can see at this exact moment, okay, this is really important. Trending up, pull back in the trend on crude. Do we want to buy this? Well, according to my Owings market analysis, yes, that's number one. I want to buy it. I like the pullback pattern. Number two, what is the volume profile doing? Well, you can see here you have a really nice distribution up here. It's an even distribution. I'm going to go over the nitty gritty here in just a moment. So do you see here how it's just a nice fat even distribution. You're right at the even distribution here in the upper range of the value area. You can see basically we're right at a point of control here. Okay, this is the most heavily traded price of the day, right? Now, just a basic rule, one basic rule is that if you want to fade a market, right? You want to trade a mean reversion trade. You want to, let's say you want to sell resistance up in here because you want to move back down, or you want to buy support here because you want to move back up, right? Then those types of trades, you want to make sure that you're in, you're basically in an area that's out of balance, right? Which is outside the value area, because then you have a really good chance of, if you're going to buy support down here, because you think crude is going to rally and the volume profile is showing you that you're outside the value area, this green area, you're outside this area, that means you have a good chance of reverting back to the mean, back to the point of control, because that's going to act like a magnet for price, right? So those are sort of reversal trades, mean reversion trades. And the same is true if you're up here outside the top of the value area high and you want to take a short to mean revert back toward the center of the value area point of control, right? That's where you want to take those reversal trades, up here and down here. Now, why do I say that in this current example? Because in this current example, we're not taking a reversal trade. We're not taking a mean reversion trade. We're taking a trade that we think is going to move away from the mean, right? We're taking a trend continuation pattern that we think is going to continue to push higher. So the volume profile here is actually telling us that this is a good place to take this trend continuation pattern, all other things being equal, because we are right at the point of control, right at the fat part of the volume profile in the value area. And why does that make this a good spot to take this trend continuation pattern? Because we're expecting in a trend, right, price is moving away from value. It's trying to find new value higher up, somewhere up in here, right? So if we think that this trend is likely to continue and push higher, then this is a good spot to take this trade, because we think that we're going to search for value up in here. I hope that makes sense for you guys, because this is where you really want to take this trade, when there's a good chance of at least getting back up to the value area high here. So you can take profit up there, or you can move your stop to break even and let it run if you think it's going to go higher. And again, you're going to get clues from the volume profile on what to do, and we're going to look at that in just a moment. And this doesn't mean that you can't take trend trades when you're outside the value area. You can, but there's a very special thing that you need to look for if you're considering taking a trend continuation pattern outside the value area, because you got to be careful up there, because oftentimes it'll revert back to the mean because you're outside of the value area, and you only want to take a trend continuation pattern up there under very specific circumstances, which we're going to go over as we get going with the presentation and move further into more examples. So for here, I hope you have a good understanding now of why we want to take this trend continuation pattern exactly where we are on this daily volume profile, right at the point of control in the middle of the value area. So let's go ahead now and just play the video, and we'll take a look at how this unfolds. But more importantly, sure, you'll see price pushing higher here, but I want you to pay attention to the volume profile over here and how this is developing, right? Because we're right in this area. So as this starts to push higher, I want you to watch what the volume is doing. As these are pushing out, more volume is coming into the market, right? So let's take a look at this together. We'll go ahead and play it here. I've gone ahead and clicked the play button. You see price is moving here, and you'll see, do you see how the volume is coming in there to the left? I'll draw your attention to it. It's right here, this green line right there. You see, as we're sort of bobbing up and down here, you'll see this is the line we're at, right? Because that's the exact price we're at right now, 73.66. Look at this volume coming in here. Okay, we're playing right now. So keep your eye on the volume profile as this is pushing higher. I'm going to go ahead and speed this up just a little bit so you can see it. This is exactly what was happening tick by tick in real time. And it's so important to watch this in the replay, because this is what's going to show you what to look for when you're in a trade live. So keep your eye on the volume profile, and we're going to go over it here in just a moment and explain exactly what we're seeing. Okay, notice how we're up now at the value area high, right? We're trying to get up there and test it, speeding up a little bit more here. Okay, we just tested the value area high. Do you see how it got rejected up there, right? Why did it get rejected up there? Because a lot of people who went long just took profit because they know that we just hit the value area high, right? They knew that was a great place to take profit. So that's why price pulled back right there. But do you see how as soon as we got back, okay, you see how as soon as we got back to the point of control again, we pushed higher immediately after that? It tells you when you see a lot of support here at the point of control, it tells you that as this volume is coming in and as the point of control is stabilizing in this area and getting even thicker, that is buying volume, right? Because price is not able to go down and through the point of control right now. Every time it hits the point of control, it's pushing higher. This tells us there's a lot of support in this area right now, right? And now that doesn't mean that we're necessarily going to just break off to the upside and just get going, right? But it does mean that you have pretty safe trades in this area from the point of control back to at least the value area high, right? And what you could see when everybody took profit at the value area high up there, right? You see how the volume didn't really come out very much, right? We're still, you know, relatively speaking, this is why this is the value area high, right? It's a low volume node up here. And you see how, you know, had we pushed up here, and if this was going to really make a big push like this, let's say, and set us up for a trend continuation pattern like this, you'll start to see, you just have to keep your eye on the left side of the profile. You'll start to see all this volume come in. This will start to shoot out fast because there's volume coming in at this price as we're breaking this resistance. And if you see that volume coming in here to the left while this is pushing higher, that tells you that there's a lot of big money up here that wants to buy this breakout and push it higher. In this case, you didn't see that. So that's why we simply held resistance at the value area high. But these are really good things to look for, good clues that you can see in real time to not only tell you where the best spots are to get in on your trades, but also where to take the profit. So it's really, really important. All right, so that's the first example of how we can use the volume profile when we're in a trending market. And next, we're going to go ahead and look at how we use the volume profile in a range-bound market. And then we're going to go over several examples together where we can see how the volume profile is behaving under certain market conditions. All right, you guys, in this example, we've got a really good one here with the E-mini S&P 500 futures contract. Again, this is at the 11 o'clock hour. So the 10 o'clock hourly bar just closed here. And this is just from a couple of days ago. The time Doesn't really matter. This is evergreen content that you can use from now into the future of trading forever, because volume drives everything. It's the most important thing. And when you match it up with your edge, which is what I do with my OMA, you know, it really, really gives you some powerful tools in terms of where to take your trades and how to manage your trades. So let's go ahead now and look at the E-mini S&P 500 futures contract. What you can see here on the hourly, right? First and foremost, you want to ask yourself, what type of trading are you in, right? I have different ways that I classify the types of trading using my methodology, OMA. This is congestion, okay? The reason it's in congestion is because we're kind of oscillating around the middle of the moving average envelope here, those green dots. So we're kind of congesting, right? We're not trending. We're not heading up in one direction. We're not heading down in one direction. So we're in congestion. We're range bound, right? So if we're in a range bound market, then we don't want to take trades around the point of control, okay? Because that's where it's going to get really choppy. That's where all the algos are active, exchanging contracts. You know, that's where the institutional players are putting in their huge blocks of, you know, buy and sell orders. That's why it's the point of control, because all the institutions are transacting at that level. And sometimes it's okay to trade around the point of control, but when you're in congestion, really use this tip and try and avoid taking trades right at the point of control. Why? Because you want to take trades at the upper end of the value area when you're in congestion. So let's go ahead and expand this a little bit. So what did we say when we started the video? This is the value area high, right? The upper boundary of the green, value area low, lower boundary of the green, point of control in orange, right? So you see here, we get a nice pop up at the close of this hourly bar. Now, I'm not going to go into all the details, but if I connect this low to this high, extend it out, you see that pink dot? That's called an extension resistance trend line. You see the way this red is moving here. This is called, you know, a pretty big pocket extension. All these different little nuances, this high back here, the fact that we're in congestion, of course, the daily analysis, what the daily and weekly charts are up to, that would all inform my decision making here. But all other things being equal, I would expect this to be strong resistance right here because of this pattern and because we're in congestion at the value area high. But I want to point something out that's really important. You see how, if you're thinking about shorting here, you see how we closed above the value area high? Well, that's going to be temporary support most likely, because price is going to search for value a little bit higher, most likely. Sometimes it'll just drop, but it's a really good clue if on the hourly chart here, or if you're trading a 15-minute chart, whatever it is, if you want to short this because you think you're going to, you know, head back down here, because why not, right? You're in congestion, you're cycling, so you cycled back up. Why shouldn't you cycle back down, right? It probably will. But if you close above that value area high, you're probably going to push higher before it gets rejected and rolls over and heads back down to the value area low. So let's go ahead and take a look at this. And the first thing I want to point out to you is, do you see this other green line up here? You might be asking what this is. Well, this is a value area from a previous day. So if we go back to the previous day, wow, look at that. This is really, really important. This was the value area high on close of the previous day. And the reason it's extending out is because we've yet to retest it, right? So this is really, really important. Now, if you're still interested in shorting this area, but you know that you don't really feel comfortable shorting here because you closed outside today's developing value area high, then maybe you want to watch and see what happens when and if we interact with yesterday's value area high, which we've yet to interact with, right? We want to see if the same sellers from yesterday that capped all this buying, we want to see if those sellers are still there at this value area high from yesterday that has yet to been retested, right? So let's go ahead and play this. Okay, and I want you to notice over here, see how we're pushing higher here? You see how, pay attention to the light gray volume profile here, right? It's light gray again because we're out of value. Value is always green, so it's searching for value somewhere else. And in order to do that, it has to get temporarily, out of value, or what I say is out of balance, because a balanced market, you're in the value area. An out of balance market, you're searching for balance or for value somewhere else. So this is searching for value up here. So let's go ahead and play this. Okay, so you push higher right here, right? And now you see how that green line disappeared. Well, it disappeared because we just challenged that value area high from yesterday. And I take them off. My settings remove them once they get challenged. So they're only on the chart visible to me if they've yet to be challenged, because it's then that they're very important, right? So now that we challenged it, I paused the recording, but let's take a look. Let's say we're interested in shorting up here. We're not just going to set an order and blindly short, but we know that, we don't really expect this to break out in a trend run to the upside. So what's happening? Well, we're just expanding our congestion area higher, right? But this might be an excellent spot to try and get short for a move back down to at least the point of control, if not the value area low, right? So what we want to look for, first and foremost, what we can see is if you connect that low through that low, extend it out, see that yellow dot, that's a beautiful low connector turning point using OMA. And then you see that yellow dot. These are really, really important combination resistance levels, okay? But using the volume profile, what you'd want to look for is you'd want to see is as the volume starts coming in here, how is price reacting? Is price pushing higher on the volume that's coming in? Or is, as volume is coming in here, is price running into a ceiling? So let's take a look and we can answer this question together. Watch that volume to the left. See all that volume coming in. Volume coming in. You see, as the volume is coming in, it's trying to push higher. More. Look, now you have your answer, right? You could see all that volume up here started to come in, because this is why it's really important to replay the chart, because when we first tested this area up here, we could see there wasn't a lot of volume, but now some volume is starting to come in. And what's happening to price as that volume here is coming in? Price is dropping. So what does that tell you? It tells you that this is aggressive selling volume, right? And if it's aggressive selling volume and we know we want to try and get short up here somewhere, now is the time when we can, get short. You can either, as you start to see this drop, because this is going to happen a lot slower in real time, right? I'm replaying it now on a speed of 80 times. So you're going to have time to watch this develop during the day. It's actually not that hard. And I show you how I do it live in real time when I do the live trading on YouTube. So come check that out and you'll see how I do this live in real time. This is not just looking back in history and, knowing what already happened. You say, I woulda, coulda, shoulda. No. This is how you do it live in real time. And I demonstrate that for you guys and help you see that every day when I do my own trading, because this is the kind of stuff that I'm looking for, right? So you got to make the decision. Do you want to go in at market here and short, or do you want to set an order somewhere higher up? And, that can be difficult sometimes. But in this case, what I would do is I would just look at, the fat part of that volume profile right there. That's where a lot of volume came in. There should be some good sellers there. So that would be a good spot, to set your order right up there around 47.64, right? With your stop now up above outside the volume profile at, 47.70. Let's say you give it 6 points or something like that, right? So if we go ahead and play this right now, we're at 47.61, right? And we may not get up there. I really don't know what's going to happen tick by tick here. That's just where I would set my order. And, oftentimes they don't get filled, right? But you have to make the decision if you want to sell at market down here, knowing your stop has to be up here, or do you want to try and, put the order a little further back so you have better risk reward, but then you risk the fact that your order might not get filled, right? Let's go ahead and just play this. Okay, so right there, you can see it did push back up. I swear, I didn't know that was going to happen. I know how this bar finishes. It finishes down here, but I didn't know it was going to push up again. But, these markets all act differently. We're on the E-mini S&P 500. That is a pretty choppy market, right? So it's a very liquid, thick market. So oftentimes it's better to set an order on something like ES as opposed to, let's say, the bonds like the 30-year or the ultra bonds or silver. If those get going to the downside and get rejected, they oftentimes will not look back and fill your order to get short, whereas, ES and NQ will. So now as this it's pushing back up here. You're short now at 47.64. You're feeling good because you outlined this thick volume area where selling came in before. And now this doesn't mean you're going to be right? This could easily just, as it retests this level, all this volume could be coming in now and just blast this thing higher and you take a loss. That's why it's important to use a stop loss. That's why you got to use all this within context. Everybody wants like a secret formula where, do A, B, and C every time and you're going to win. It doesn't work that way. You have to use the volume profile within the overall context of your technical analysis, right? It's super important. Let's watch how this ends up playing out. Now you can see. Okay, now do you guys see, rewind the video and watch this. Do you see how all that volume now came in as we're dropping even further and surpassed that as the high volume node in this upper distribution area, right? Really, really important. Because as that's coming out there, the volume price is dropping, telling you that you're probably in a pretty good trade at this point. And this is one that, now that you're in this trade and you shorted from 47.64, well, the next question you have is, where should your target be? Well, I would say that number one, your target should at least be back to the point of control, right? Because this is going to act like a magnet. It's where all the institutions have been trading all day. There's a pretty good probability that you're going to head back to the point of control, at least because you faded, you shorted the reversal up here outside the value area high, right? And sometimes you'll even want to target the value area low if you're shorting from the value area high, and then vice versa. If you get long down here, you want to target either the point of control, depending on where it is, or the value area high. Let's go ahead and just play this through. You can see now, okay, now you're back inside the value area. You're feeling good. Life is grand. You're up 10 points on this trade, so that's $50 a point on the ES per futures contract. You're up $500. You're loving life, right? And then you're just asking yourself, okay, now I want to point something out. Did you guys notice something right there? Did you notice how, as we started to come in here, you see how the point of control, you got to keep your eye on this, right? It shifted. And this is why you can't look at a static chart. You've got to look at a tick by tick replay chart like we're doing here with Sierra charts. You can see how the point of control was down here. I think it was right in here. And then it shifted, boom, right here, because that means a lot of volume now is coming in right here. So you'd have to ask yourself right now, with all this volume coming in, do you want to just take your profit? You've made 10 points, you nailed it. Or do you want to, let this thing try and work its way down to the value area low? To be honest, I would just take my profit here because I'm up 10 points. I saw the point of control shift. It's telling me that it's because the point of control is shifting from down here to up here. We're accepting prices higher. And that doesn't mean we're not going to, continue to roll over. We might. And in fact, in this example, we do, but we don't know this ahead of time. Right, so I would just take that profit because you've already tested the middle of the value area. The point of control shifted. That's where I'd get out. So this is a really good example of how to structure your trades when you're in congestion, you're in a range-bound market, and you're outside the value area. So now we've looked at a trending market with crude oil in the first example and how to structure that trade based on the volume profile when you're around the point of control inside the value area. And then this was a really good example of the opposite case occurring, where we want to take a mean reversion or a reversal trade outside the value area back to the point of control. So the first trade was from the point of control away from the value area. This trade was from the value area here back toward the point of control down in here. So these are really good examples. Let's go ahead and just go over a couple of more, and then I'm going to cut this video because it's already hitting 33 minutes. And I want to just do a series of these videos where we look at different examples under different situations in the markets. And we'll look at a lot of different symbols. So we'll see how price reacts on gold, silver, copper, bonds, the indices, ES, NQ, the Dow, the Russell. We'll look at a lot of different examples under a ton of different circumstances, because that's how you're going to start to put together your playbook for where you use your different setups depending on how the volume profile looks for that specific setup. So I'm going to create a playlist for that so you guys can easily just go through it video by video by video. We'll look at a couple more examples here, and then I'll move on to recording the next video, and that'll pop up for you at the end of this video, so you can continue with the volume profile playlist and how to use the volume profile to help your trading. Okay, we're going to look at another really good example here. This is the Dow Jones Futures Contract, YM, and this is from this Wednesday of last week. But again, it doesn't matter. This can be any day, any market. It's applicable to everything. So the first thing you'd want to do, right, because we already looked at those first two situations, which were like crude oil was in a little bit of a trend, nothing major, and we wanted to see how we use the volume profile. We're in sort of a minor trend, right? And then we used the volume profile when we're in congestion, we're range bound. We saw that example on the E-mini S&P 500. And now I want to pay attention to what happens when you're in a pretty good trend. I kind of call this like a roaring trend run because it's just firing to the downside, right? So this thing is just roaring here. And when that happens, obviously, number one, you want to have a type of technical analysis where you're easily and quickly able to classify the type of trading that's happening. Okay, so this is heading down. You're making lower lows, lower highs. This is the hourly chart. So this is a real solid trend now to the downside, right? And for me, my classification of a trend is, am I getting consecutive closes here underneath the middle of the moving average envelope here, these green dots, and then am I closing outside the envelope bottom in green? That tells me that it's even more powerful trend. And then of course I've got the true average here, these sort of beige dots. Are we breaking these trend line supports? There's a lot of different things I look for, but just generally speaking, are we closing below the middle of the moving average envelope? And are we making, lower lows and lower highs? In this case, we are. So this is a really solid trend run to the downside. Now, once I identify that and classify the type of trading according to my methodology, I need to look at the volume profile, and I need to say, where am I in the volume profile? Well, let me ask you guys, where are we right now? Well, we're in the value, we're outside the value area low, right? Because we got the value area low here. And by the way, at this point, if you made it to, where are we? We're 37 minutes into the video. If you made it this far, go ahead and leave a comment down below the video. And let me know if you've got any other questions that you want me to address, if there are things that I'm missing, or if I'm not explaining something, very clearly. Go ahead and let me know, and I'll try and get better about it. And then also, once the channel grows to a couple hundred subscribers or something like that, I'm going to go ahead and do a drawing for all the subscribers, everybody who's helping support to grow the channel. We're going to do a drawing, and I'm going to give away some pretty advanced course material that I don't share with the public, but I'm going to share with some lucky subscribers, and for those who are really interested in the content and who are becoming proactive in the channel. So keep that in mind as well. And the more times you comment and ask questions, that shows that you're engaged. Then if you're engaging, then I want to engage back with you, and your chances of winning some pretty cool stuff gets higher. So just keep that in mind. It's kind of a little special bonus I'm going to share with you guys because you made it this far in the video, which very few people do. So if you're even listening to this, good job. I commend you. It means you're passionate about your craft, and believe me, that's what it takes to succeed at this. And the rewards, can be massive. So I would encourage you to stick with this. So that was a little bit of a tangent, but I think it was a fun tangent. We're outside the value area low, right? So we're searching for new value, right? And you want to ask yourself at this point, where's the point of control? You always want to ask yourself, where's the point of control? Well, point of control is way up here now, right? We're a long way away from, the point of control here, okay? So that's the first thing you want to look at. And as you're trending down here, rule number one for me, and I hope this helps you guys, is I never just get in on a trend. Like if this is trending down here and we close here, even if I think it's going lower, I don't just short here, because I always ask myself, where's my risk on this trade? Where do I have to put my stop? And I've got to put my stop above these highs at least. I don't want to take that kind of risk on the Dow. If I'm putting on one or two futures contracts, I don't want to risk. In this case on the Dow, you're risking, just call it 37.9, up to 37.940. 40 points, $5 a point. throw on a couple contracts. I don't want to spend $400 or $500 on this trade to find out if I'm right. I like to wait for pullback. So if I think that we're trending down and this trend might continue the rest of the day, I want to see a pop where I get a chance to get short for a move back down. And I'm happy if this just keeps going down without me, no big deal, no FOMO. It's like I can't get every trade, right? So I know what I'm waiting for. I wait for that pullback. So let's go ahead and just see what happens. And we're going to watch how the volume profile develops. You see the value area shifting lower there, right? In real time, the value area is shifting lower. The reason the value area shifted lower is because a lot of contracts started trading down here right now. Okay, so now do you see how it's so important to review these with tick by tick data on the replay chart? Because when you look back at how the volume profile looks at the end of the day, it doesn't tell you anything except that exact moment in time, what's important, and that's at the end of the day. It doesn't tell you what happened at 8 a.m. or 9 a.m. Eastern when things were really getting going for the New York session. You see how this shifted all of a sudden? A moment ago, we were trending outside the value area, right? Now all of a sudden we're back inside the value area. Why? Because all that volume started transacting down here. So it moved the value area low, because now 70% of our volume for the day is here, which is right where we are, because all that volume came in and shifted the whole value area lower. So that's really important, number one, to notice that. So let's continue to play here. Here's our pullback. And on the charts right now, it's about 8:30 a.m. Eastern. I'll speed it up a little bit so you guys can see, because this is really important stuff. Now it's about 8:45 a.m. We had some news come out at 8:30. So I'll pause this at 9 a.m., which is right there. Boom. Okay. So, you had a pop up here. It got sold into. You're continuing to head lower right here, right? So you're still wondering now, is this trend going to continue to the downside, or are we, preparing to end the trend? Well, you don't really have enough information right now. Okay. So this is also really important. You don't need to think, you don't have to know what's happening all the time. I mean, we don't know what's happening all the time, right? So that's actually a huge tactical advantage if, according to your methodology, your technical analysis methodology, your ability to read the volume profile, if you're able to, at least know where you are within the overall context here, and then say to yourself, I don't really know what's going to happen next. Great. The fact that you know that means that you won't take a stupid trade and take a loss and ruin your confidence and lose money. You can just wait for the market to continue to develop until the pieces fall into place to where you actually do feel that you have a good idea of what might be most likely to happen next. And that's when you want to put the trades on, right? So right here, I would say to myself, this is trending to the downside. I don't really know if this is going to continue to trend down, or if we're going to go for congestion entrance back up here. I don't know. So I'll just let this play. I certainly, right now the trend to the downside looks strong. So still at this moment, I'd be waiting for another pop up here to try and get short. I wouldn't have shorted this pop up here. No, I like to wait for hourly closes, because sometimes you just don't know how high this is going to go. That's just, I use the closes because they kind of anchor my decision-making process. I find that for me, if I start trading intra-bar as it's developing, it's just too easy to start over trading. And I like to plan my trades hour by hour. And I do that when I trade live in front of you guys on YouTube at 8 a.m. every weekday. I go through all the markets over here, the futures markets, and we go through them hour by hour, and you see how I plan out my trades. You can go, there's a live trading playlist, because I just started the live trading last Friday. I did a couple of test live streams just to kind of figure out how that software works, and you get to see me going through all these markets and how I structure the trades and how and why I made that silver trade where I made $1,000 on a couple of contracts. You can see how I do it hour by hour. So I wouldn't have sold into this, but let's just continue to play here. Okay, we're pushing lower, pushing lower. Okay, you see again how the value area shifted to the downside. So this is really important now, right? Because what are we seeing? We've seen twice. First of all, we've seen the point of control shift, from way up here to down here. And now we're also seeing the value area shift lower twice, you know, pretty significantly, right? Of course, during the day in real time, you'll see this shifting lower, you know, tick by tick by tick, but you'll notice the magnitude of the shift. It's really shifting lower. So what does that tell you? It tells us that, you know, the fact that we're trending lower and more volume is coming in as we're trending lower and the value area is shifting lower, it means the market is happy. It's accepting lower and lower prices. So if the market is accepting lower and lower prices, what does that tell us? It tells us that the trend to the downside is likely to continue, right? Because the market is happily accepting these lower prices. So this just gives me more confidence to, you know, short on a pullback up in here. I mean, if we got back to the value area high, that would be a gift. I don't know if we're going to get there because we are in a strongly trending market to the downside and we are accepting lower prices, right? So this is kind of the inverse of what we saw with crude oil in the first example where we're heading up. Now this trend, you know, is a stronger trend, but to the downside, but you're pulling back now here, right, to the point of control, right? So let's wait for this close here, which will be, I'm gonna go ahead and click the play button. It's 9:30 a.m. So the market just opened here. So boom. Okay, so look, it didn't even get a chance to close up there because this is the market open, right? It's volatile. 9:45 a.m. You're watching it head lower. And here's the close, 10 a.m. Okay, so notice how we're shifting again. But I want to point out that example right there because for those of you who want to scalp or you want to, you know, day trade on 5 minutes or 15-minute charts, the information you had right there from this example, just by being aware of how volume was shifting, how the point of control was shifting down, the value area was shifting down, heading into the open, and now all of a sudden at 9:30 a.m. Eastern, when the stock market is going to open, and the Dow is sitting here at 37,900, if you want to take a chance there at the open and capitalize on that opening volatility, and you got to pick a direction, and what direction are you going to pick? Down, of course, right? Because you're very aware that that's an informed decision based on what's been going on with the shifting of the point of control, the shifting of the value area. You're trending down already. The market is accepting lower prices. That's a great opportunity for you, you know, if you're scalping or trading, you know, very short term, 5-minute charts, 15-minute charts, focus on the short side there, right? Because you got all the reasons that are telling you to do that. So it's super, super important. All right, so now we just got the 10 o'clock close here, hourly close. We're heading into the 11 o'clock. Now, this is where a lot of people, right, they start, you know, to wonder, okay, I mean, is this trend going to go all day to the downside? Well, number one, statistically, the indices, you know, the ES, the NQ, the Dow, it's really only going to get a solid trend from open to close, you know, about 20% of the time, actually a little less. So the odds of a pretty good reversal at some point are pretty high with the indices. So that's one really important statistic to keep in mind at all times. If you trade the indices, write that down, put it on your trading desk. You know, super firing trend days that last all day long are the exception, not the rule. They happen, you know, a lot less than you think. So at some point, you're going to be looking for this thing to reverse. Now, let's go ahead. We see we shifted lower again, right? I'm still in favor of the short side, but the question is, you know, where am I going to be able to get short from? Watch this. And we're coming up. It's 10:20 a.m. Eastern as this is developing. 10:30. Again, I make my decisions on the hourly closes because it's just so much easier. So right here, you've got the 11 o'clock close. Boom. There it is. So now you can see here, right? You just really, the trend is firing here now, right? But now is when we're at the point where, you know, we need to ask ourselves, okay, from here to here to here, the volume profile was shifting with big volume coming out, point of control dropping, value area dropping, everybody's accepting lower prices, right? You can see, because remember when this became the low, you see that how the volume, it was accepting down here, right? Which tells you that that trend is likely to continue. And then you see how when we started making lower lows here, all this volume, you're accepting that. So you're likely to head lower, right? So what do you see that's different here? I'm going to let you tell me, what do you see that's different? But we just made, you know, fresh lows here. Big move to the downside. Now again, this is one of my favorite combinations. You see, if I connect this low through this low, I get that yellow dot. And then if I connect that high through that low, I get that pink dot. I love this. This is a beautiful combination support level. So I'm going to be looking for support here anyways, right? Because of that pattern. So that does help me. It gives me a tactical advantage. Whereas here, I wasn't looking for support because see how we broke that pink dot? We didn't hold it on close and the volume was coming in. That just tells you that you're likely to get follow through there. But on this particular bar, I'd be interested in, my pattern says, hey, we could have some support here, but also see how the volume right now is not shifting down here. So if it's not shifting down here, this is giving me a very important clue that this could be a good spot to start looking for a mean reversion trade, you know, a reversal trade, because we're outside the value area and we're not, you know, accepting yet to the same magnitude these lower prices that we accepted these higher prices up here. So we're likely to maybe reject down here and head back into value up here. Let's see. I don't know what's going to happen. Play this. You know, I can just tell you, like, based on my particular strategy, if I was to buy this here, which I would be open to, I would need to know where I am on the weekly chart, the daily chart. I would be looking at the weekly volume profile as well. There's lots of things I look at that you can see when we trade live together on YouTube, when I do it in real time. But here on the playback, I'm just, you know, using the daily volume profile for the sake of simplicity. But if I was interested in, you know, getting long down here somewhere, I would use the same tactic that I showed you on the ES from that previous trade, right? That reversal trade where we wanted to go short the ES, the E-mini S&P 500 future. If I wanted to get long the Dow down here, just all other things being equal, I would just look at, okay, where's an accepted price down here is right here, right? You see all that volume, that high volume node, 37,680. That's probably where I'd set my order down in there. And then I'd put the stop, you know, down in here. So let's go ahead and just play this. See if it, okay, so there you can see point of control shifting down here. So we're accepting these prices down here, right? So the fact, if I was interested in buying this, like I just said, I was interested in potentially buying it. The fact that we just shifted and accepted lower, I wouldn't have an order here because we're accepting lower. So when we come down here, yeah, it might bounce, but we may accept lower as well. So I would just, right now, I would shift back to saying, okay, I don't really know what's going to happen next. I'm still kind of looking for a reversal, but the fact that we shifted the point of control even lower now, I just want to wait and see what happens here. So it is coming to the close here, 12, there's the close. Okay, so now you can see we closed right here, just inside the value area. Low, the point of control is down here. Now you can see you've got a pretty, you know, we're 11 a.m. You've got a pretty balanced profile now, right? It's kind of, you know, fat here in the middle and then it comes down. So this is your, right, your low volume area down here where you could see some support. You did close inside the value area. So this is the area here where you could start looking, you know, potentially for a long, because this was, right, the first time in the trend run down. You see all these closes. What do you guys notice about these closes? They're all outside the envelope bottom, meaning we're firing to the downside. And now what happens? This is the first close where we actually move inside the envelope bottom. So that gives us a big clue. I had support pattern here. We move inside the envelope here. I mean, there's going to be a lot of support down here. It doesn't mean it has to hold. It just means now all these people who are short, they're more likely to maybe take some profit, right? So I can see we're at a good spot on the volume profile now for maybe a little bit of a reversal. So now I'm interested in maybe taking a long. So the question would be, you know, where would I want to take the long? Well, it would basically be down in here somewhere. I wouldn't be super aggressive on this. I wouldn't just go in at market here. I would look and say to myself, okay, well, I would probably want to try and get in at, you know, some of these accepted prices down in here. So maybe 37,680 is where I would be looking to buy right now. Go ahead and play this. And it may just go up without me. Like I said, I don't remember what happens here tick by tick. I'm just telling you how I use the volume profile in real time. because I use it like this in real time, it's easy for me to look back here at the replay and say, oh, that's where I'd put my order. And just like in real time, sometimes it gets filled, sometimes it doesn't get filled. This time it didn't get filled. I missed the long right there, right? And that's okay. Sometimes you miss the long. There's just nothing you can do about that, right? Whereas on the E-mini S&P 500, we got the short with our order. Sometimes you don't get them. And if you're more aggressive, you can just go in right there, right? Certainly you can use this information. For me, I like to just set my orders and trade, the hourly charts and look at all these markets. But if you're going to be scalping, well, certainly when you know now based on the volume profile and everything else, why we shifted our focus down here to looking to play the long side. Well, for those of you who are scalpers, how much does that help you to suddenly switch your focus and say, I'm only going to scalp from the long side? If you're going to scalp, which I don't recommend because it's a very difficult skill to do. It's too easy to slip into FOMO, over trading, blow up your account, things like that. But if you are going to scalp, which some people are good at it, how much does it help you knowing which side to scalp from? In this case, the long side. It really, really helps. So now let me ask you guys, and then we'll go ahead and end this video here shortly because we're at, what are we at? We're at 55 minutes. Okay, it's been a good video, good examples. And we'll continue the series here in the next video with more examples and more specific situations. But now that you're pushing back to the upside, trend run down, big trend day, right? Well, I know that for me, this congestion entrance up move, I'm going to be always looking at around 2 to 3 dots back here on my envelope for strong resistance. This is called the congestion resistance level that I'm looking for. I'm going to be looking for my extension trend line here, the near high here in red. There's a lot of things I'm looking for. But where do I connect all this? Well, I also want to connect it to what I'm seeing on the volume profile, which is super important. So if now is where I'm willing. I was looking to get long down here, didn't get filled, no big deal. But now I expect us to stay in congestion, meaning I expect resistance to be strong up here for a move back down to this accepted area of the volume profile, right? So, and one thing I forgot to point out that I want to mention, when you see the point of control, and I covered this in another one of my videos, when you see the point of control shift down and it gets close to this value area low, the two of them together, under many circumstances can act as a support level. And it's the same thing. If the point of control is up here near the value area high, it can turn into, a strong resistance level. So keep that in mind. So now that we're pushing higher, I would just, look at this and say, well, where would I want to short up here? Well, I'd probably want to short like, right in here. As you can see, we're accepting prices down here. We rejected prices up here earlier. So where's a good low volume node for price rejection? And I swear I have no idea what's going to happen here. I really don't. I would look at this, and it doesn't matter if I pick a trade here and it loses, I don't care because number one, I have losing trades, and number two, I use my weekly, all my higher time period charts to make real decisions during the day. I don't have those available to me now, but for the sake of an example, just all other things being equal, I would pick a low volume node, which you can see here. This is kind of the zone here where price got rejected last time. We flew down straight through it. So I expect that to be a good rejection area here, 37,860, right? So I wouldn't put an order there, but I would watch. And if I start to see, rejections, then I would just jump in short at market. So let's just see. I'm going to turn the speed down here about 50 times. And let's just play. Okay, so you already see how we're rejecting up in here, right? We tried. So I would just be short up in here. Because we have all the reasons to go short on the volume profile and the charts. Just letting this play out. This is where there should continue to be a lot of resistance if, what we're seeing is valid. And notice how as price is struggling here, you see how the volume profile, right? More volume is coming in here, but as the volume is coming in, we're not able, it's not like we're racing to the upside. In fact, this low volume area remember how that was a low volume area before? And that's why we said we would, be interested in shorting there and get short. Well, now it's more volume is coming in. It's no longer, that the low volume area has shifted higher now, right? Because where it was low volume before, suddenly there's some volume there because there's some sellers stepping in, right? And we were one of them because we saw this happening in advance. And this may, you know, explode to the upside. I swear, I really don't know. I don't remember how this played out. I'm just, you know, based on what I'm seeing here, this trade makes a lot of sense. So it's 15 minutes until this close at 2 p.m. Eastern. So just give it a chance here to close. I'm playing it slowly so you guys can watch how the volume profile is developing. You can stop the video, rewind it, go look at it. It's really important. Okay, so we got about 2 minutes left here. Boom. When I say 2 minutes, I mean, like, you know, I'm speeding it up 50 times faster. So for us, those last 2 minutes of the bar go quickly. But so now you can see, right? What happened? Well, we wanted to short that low volume area for the reasons I already outlined. We were at the, you know, near the top of the value area high, which is a great spot to try and take a mean reversion trade, at least back down to the point of control or the value area low. And as we shorted here, that's when you can see a bunch of other people shorted too, because all that volume came in and price was dropping as the volume was coming in, which tells us that this is probably going to be, you know, cycling back down here. So, you know, this is really, really important. I think these are great examples that illustrate how you can use the volume profile to find some really good setups and give you a great idea as to what is, you know, what's happening now, and then what is most likely to either continue happening, or if the state of the market is going to change and reverse, or if it's going to be a continuation. The volume profile gives you a really good way to identify that, especially when you combine it with something like, you know, I use my Owings market analysis, which works great. It's because I understand it, right? And I understand how it works in relation to the volume profile. But if you've got your, you know, candlesticks and moving averages and whatever else, you know, you can use that as well. As long as you have a clear understanding of your methodology, match that up to what I'm teaching you here with the volume profile, and it's going to help you tremendously. And I hope it does. So I'm going to go ahead and just wrap this video up. It's been about an hour. I think it's been a great introduction here to some great examples for the volume profile. I hope you found it helpful. Please do, you know, give me a like, subscribe, all that good stuff, so we can start to, you know, grow the channel, and I can be aware of what you guys like, what you value. If you do find value in this and it's helping you, then that gives me encouragement to make more content like this. But I really enjoy this stuff, which is why I make the content, because I'm constantly reviewing my own trades anyways. I do this for a living, and I thought, you know, why not just, there's not a lot out there on YouTube that's both informative and also not completely boring and put you to sleep. So I'm trying to make this a little bit more fun by showing you really good examples and you know, hopefully not putting you to sleep with the volume profile. All right, everybody, take care. And I'll be back with another video soon. All right. And remember, we're going to be trading live together weekdays at 8 a.m. Eastern. I put the notification on the channel, so you can set a reminder. When you subscribe, set a reminder. You'll get notified when I go live, and you can jump on and we can say hi. Okay. Take care.